having it shipped to our door. We overloaded our supply chains. The supply chains were never broken. We just overloaded them with how much stuff we were trying to get shipped to our front door. And so we saw a surge in goods prices, right? That's the light blue bars there. That's kind of starting to peter out. And for the last couple of months, the last 3 months in a row, goods prices have declined. Now they're coming off of these really, really high prices, right? The prices of used cars went up 50%. And now they're down like 10% off of that 50% increase. So like they're still higher than they used to be, but inflation is the ongoing increases in prices month after month and year after year. So we've kind of stopped that surge and it's now starting to erode a little bit, but that means inflation is down. For those reasons. And then we have underlying service inflation, which is just everything else. It's the cost of your realtor services and your title companies and your haircuts and you're going out to eat and on vacations and all that sort of stuff. It's everything else in the economy has also been a contributor to inflation. That's kind of generally the big boy of it. And that is where the risk has been, is that the Federal Reserve can't control Russia invading another country. The Federal Reserve can't control overloaded supply chains per se, and they certainly can't control the COVID zero policy in China and things like that. But they can control overall demand by raising interest rates and making us stop spending as much as we've been doing. And so that is kind of, they've been focusing more on that dark blue bar. And that has been quite large just, for the last couple of years as well. So inflation, has been a big problem. It still is a big problem. Prices are still up tremendously over the past year, but we now have 2 months in a row of slow inflation, right? When we produced our last forecast just before Thanksgiving, we had 1 month of slow inflation nationally. As of this week, we now have 2 months of slow inflation nationally. So it's the start of an encouraging trend. The question is this slowdown in inflation just about oil prices coming down and then maybe some normalization of the supply chains and the goods prices starting to peter out a little bit? Is that it? Or is this a fundamental slowdown in inflation? And the answer to that question will probably determine the nature of the cycle moving forward. And it's all about how the Federal Reserve will respond to it. Yesterday at the press conference, if you read the statement, if you just read the words associated with what Federal Reserve Chairman Jerome Powell was saying, there's no indication that they're anticipating this is a fundamental slowdown. There's no indication that they're anticipating they're going to slow down their rate hikes. They actually raised what's called the terminal rate, how far they think they have to raise interest rates to actually cool the economy. They actually bumped that up a little bit yesterday, which wasn't unexpected if you've been paying attention. But so it seems like they're still really hawkish, that they really want to drive the economy down to slow inflation. But if you listen to the way the Federal Reserve Chairman said the words and the way he reacted to some of the questions and the things he was mentioning when he was answering the questions yesterday, I think they're quite on board with the possibility that they're going to slow down a lot earlier than they currently anticipate, or a lot earlier than what the numbers that they released yesterday show. And so that would be good news. The reason is that these inflationary booms like we're in today traditionally don't end well. And so the odds of recession are really high right now. They're so high that will, 2 quarters ago, we said there's about a 50-50 chance of no recession or a recession. Last quarter, when we released our forecast before Thanksgiving, well, we said those odds had shifted a little bit more. Maybe a recession was more likely than not. Not tremendously so. It's not a slam dunk. We said in the second half of 2023, there's maybe more likely than not going to be a recession. Not today, but maybe in the future, because of this inflation, Federal Reserve interest rate dynamics historically has not been good. We've never seen this. We've never done this. We've never seen a slowdown in the economy such that inflation cools just enough without a recession. And that has never happened. And so it's a really challenging position. But now that we have 2 months of good inflation data, I think, the probability of that soft landing increases. And I can't tell you what our next forecast will look like in February. I'm going to really start working on that in here after the new year in early January. I'll really start to work on that. But overall, super encouraging. I think, again, the Federal Reserve being able to, instead of slamming on the brakes like they have been doing this year, maybe tap the brakes or even let off the brakes and coast for a little bit, like stop raising interest rates, just wait and see what the ultimate impact is on the economy. That is ultimately going to be a good thing And even if inflation were to revive next summer or something like that, then they would still be in a position to handle that, come the end of the year and in 2024. So I think just being able to like breathe for a second, we're starting to be able to see that happen, or at least the data is starting to align in such a way that the Federal Reserve can let it happen. And that would be encouraging for the economy, but no rate cuts in the foreseeable future. The declines we've seen in mortgage rates in the last 4 or 5 weeks are all about financial markets pricing in anticipated Federal Reserve cuts. I don't see the Federal Reserve cutting anytime in the near future. I think that, they're saying in 2024 they'll cut, maybe the second half of 2023. If everything goes as nicely as possible, we might see some Federal Reserve cuts then. But some of the financial markets started pricing in cuts in March or something like that. It's like, that's just, I don't see how that could happen, but you never know. I think the financial markets have gotten ahead of themselves in a lot of this respect. And so that is also something to keep in mind, is I don't think cuts will be coming. I don't think mortgage rates will be declining down to 4 or 5% anytime soon. But, there's some other things going on in financial markets that aren't just fundamental. They're investor, financial market behavior going along with it. So with that, I took up a lot of my time. I'm going to skip through a couple of things. We know the labor market's hard. It's hard to find workers. The encouraging thing here when it comes to the labor market and workers is, at least in Oregon and the Oregon data, the workers have fully returned. There's not just people sitting on the couch playing video games, not looking for work, or to the extent that does happen, that's a smaller pool of the population today than it was before the pandemic began. So like the labor shortage is all about the fact that everybody has a job, and businesses want to hire even more because their revenues are up, their sales are up, they want to chase those market opportunities, and it's just hard to find workers because everyone already has a job. And so that is the nature of the labor shortage or structural issues we face today. It's not because there's a bunch of people just waiting on the sidelines. In Oregon, they have fully returned, and even more so than pre-pandemic numbers would indicate. So that's a good news. It's a good type of labor shortage, I guess, so to speak. But of course, not if you're a business owner looking to hire. It's incredibly difficult to do that today. Here's our recession. We're saying the second half of 2023, the possibility of a recession is pretty high. It's going to be mild in nature. It's going to be mild for 3 reasons. Inflation expectations remain well anchored. Businesses and households are saying, we don't think this 7, 8, 9% inflation is sustainable. We don't think this 7, 8, 9% inflation is going to persist and continue. And so if we're not making our long-term planning decisions at the household level or the business level based upon 7 or 8% inflation, and we're saying it's going to go down to 3% inflation a handful of years from now, if we're not changing our behavior and embedding this high inflation into our long-term decisions, that means inflation is more likely to slow. Just a question, how quickly will it slow, and whether we need a recession to see it slow or not, right? So I think inflation expectations, we're not getting into some sort of crazy wage price spiral. That's one reason why we'd have a mild recession. The other one is that tight labor market. Businesses don't want to lay off any workers. Even if sales slow, they don't want to lay off workers. We're in this record corporate profits environment and record corporate profit margin environment. So there's a lot of financial wiggle room on the balance sheets for corporations and businesses to hold on to workers, even if sales slow. You can give back some of those profit margins to back to where we were in 2018, 2019, and still retain a workforce. I think that'll be a big part of a more mild recession. And then the third one would be household finances are quite strong. Savings are up tremendously. Debt levels are still relatively tame. Asset markets are still up over the 2.5 years. Not been a good year for stock markets, but it's certainly up over the pandemic period. And so if household balance sheets are still in really good shape, so if our ability to spend continues to be strong, that's going to short circuit some of the negative recessionary impacts as well. When we look around the state, who's going to be most exposed to a potential recession and the nature of it, it's really going to be our urban areas, our fast growing Central Oregon, and then our urban areas. You see all the Portland related counties there in the middle. You see Jackson, that's Medford. You see Josephine, that's Grants Pass. You see Lane, that's Eugene, right? Like so why would that be? What is going on here? It's the nature of the changes in the economy today. It's the nature of the changes in a potential recession next year. It's all about high interest rates. And what does high interest rates do? It hurts housing, as you all know. It hurts manufacturing. It hurts transportation and goods production. And then we also have some tech layoffs as well being announced, certainly in the past recent months. Now, The nature of the tech in Crook County is very different. It's data centers, which are not going to see the layoffs like some of the software and some of the other sort of consulting services that some of the big tech companies do. So I think that Crook number's overstated because of the nature of the tech that's there. But just the way it works out, if we're just trying to take our state forecast and map it to the local level, it's impacting that. But so I think that's the big thing is with a high interest rate environment, it hurts construction, hurts manufacturing, hurts transportation and warehousing and things like that. And you see a lot of that in our urban areas, and certainly see that in Central Oregon. And so I look at this map, I look at this scatter plot, which I understand is hard to read, and I'm not going into a lot of detail here, but I look at it and I'm not worried. I see it. I'm like this relative industrial structure mix, the patterns of the slowdowns in the economy and the shift out of goods and back into services and vacations and things like that. And I'm not concerned at all. This will be the nature of the cycle if we get one next year, but I'm not worried about long-term growth concerns for this cluster of counties. If it was really impacting our more rural areas, that would have me more concerned. It is not. It's our fast-growing, strong metro areas. So I think come 2024, 2025, we're going to be just fine. Population growth is rebounding. It didn't slow down in Central Oregon like it did statewide. It kind of slowed down and held steady in Central Oregon, but statewide it slowed, and now it's reviving as the economy picks back up. We will get 2022 census data any day now. It's usually out by now. They say it's going to come out in December. It always comes out in December. It's lagging for some reason. I don't know what Census Bureau is doing right now, but we'll get 2022 Census Bureau estimates for population, for cities, or for counties and states any day now. And so we'll see what that looks like. It's something to keep in mind. And then finally, housing affordability. The rise in interest rates has really crimped and destroyed housing affordability. And so it slams into a brick wall. If we look at what's happened in the Bend market, Deschutes County market in the last year, right, we've gone from 23% of local households could afford the monthly payment on the median price home sold, down to 14%. Yeah, I have down 14%. So we've priced out basically a third of the market due to the rise in interest rates. And that's the volumes of sales activities down, the prices are down, new construction activity is down, new permits for single family homes in Deschutes County are down 37%, year over year. And so there's a big decline, big drop in activity. Of course, there's a big backlog. So projects are still being built. It's just new ones are not entering into the pipeline given the soft pricing environment and the terrible affordability market. Now, these things will pick back up as rates come down in the years ahead, and as incomes grow and things like that. There's some good news from this vantage point, but it's still this really low volume of activity is going to stay with us for at least another quarter, if not longer. So I'm out of time. Here's my contact information. I'm always happy to chat, reach out if you ever want to talk Oregon economy or anything related to that. So thank you.
You're muted, Kevin. You're muted.
Well, you always were taught the space bar should unmute, but it wasn't working. So, thank you very much, Josh, for that. I was just looking in the chat and the Q&A, and there isn't anything in the queue. So with that, I did get a question, will the slides and presentations be available afterwards? I should be able to get a copy of those that I have, and we'll get those to you. And we'll just include it with the certificates. So we'll have all that as part of it. They did ask if you guys at towards the end can put your contact info in the chat so they can put it there or grab it from there and copy it. But with that, I'll just go ahead and turn it over to you, John, for kind of a look at Central Oregon economic outlook. And so take it away.
You bet. So I got stuck here trying to get into the chat and put my contact in real time, and I shouldn't have done that. So let me share my screen here, getting back on track. That's the one I want. And just checking to see everybody can see my PowerPoint, except for the fact that it is at the end of the PowerPoint, because that's where I was grabbing my contact information. Here we go. All right. Hey, everybody. I can't see you. Nice to not see you, darn it. But I can see the folks that are part of the panel. Thank you for inviting us in, Kevin and Deschutes title team. Appreciate being back here again this year. And so today I'm going to talk a little bit about what's new with Edco. And there's a lot. As Kevin had alluded to it, we kind of got started about some changes here at Edco, particularly in the leadership role. So today's slides, I've got about 20 slides. I'm going to burn through them pretty fast. Today, we're going to talk about the team, the Edco model, and then employment growth and recovery. Some slides that we pulled, mostly, coming from our economists, which we're not economists. So we're not of the like of Josh, who reports on the changing conditions and data analysis. Our look to the economy is really looking at what companies are doing. And so I do have some slides for you today on pending projects and activities that we're working with that is a bit of a barometer to the future. You know, what companies are investing, what industries, what are the jobs and capital investments, and by community, what does that look like? But just a reminder, our work in economic development is really tied to helping to create a diversified local economy and a strong base of middle-class jobs here in the Central Oregon region. We do this by helping companies move, start, and grow here in the region. So I'm going to give you an update on the team. So lots of new faces, but the same great services to our region. Some shifts internally, as was mentioned. I've moved from the Ready Director to the CEO of Edco. Steve Curley's been hired as the Ready Director. But of the 16 people that we have hired 7 new people and rehired someone from the past, Eric Strobel, up in Sisters. And so there are 16 people working on economic development, working directly with businesses to help grow that economy within Edco. And so we're one of the largest private sector economic development agencies in the state these days. And so this is the first 8 of our team. Conglomeration of communities. And so in Central Oregon, you know, that's the Tri-County area generally. And so this is, you know, job growth over year in October. And we lead the state when that's concerned. And I will say Crook County is playing a really big role in that. It's not just Deschutes County right now. In fact, Crook County was in the first counties to recover coming out of the recession. And so to talk a little bit more about this, if you look at, you know, index to 2005, this shows a share of job growth since 2005. You can see the Great Recession there that, you know, started in 2008 and ran, you know, in the state recovered before we did in some cases, but you can see that pandemic related job losses there in 2020. And now, you know, we're well above where we've been in the past in terms of total employment in the Bend-Redmond statistical area of Deschutes County. So this is Deschutes County versus the state. And we're at an all-time high in terms of employment along this period since 2005. And so talking about Crook County, this is kind of a graph that is interesting to me. This shows on the left, the Great Recession, job losses in red and job gains in blue, through February 2020, or the start of the pandemic, right? And so that's the Great Recession, right? Those are what happened to us in the Great Recession, job losses and gains. On the right is the job losses and recovery, job gains in blue from the pandemic. And those are 2 very different downturns, right? One was like led by, you know, this housing, you know, bubble, you know, imploding. And this was, you know, obviously related to the pandemic. And what this slide is really meant to show is that Crook County in the Great Recession was terribly hurt. They were, you know, high teens, almost 20s in the unemployment rate, you know, in the Great Recession. And it took them a long time to climb out of that. And so they were worst of all 36 Oregon counties. The pandemic, however, they were one of the quickest to recover, and they had the largest net gain. And so, you know, that's a kind of a worst to first mentality. And, you know, a lot of that does have to do with Crook County wasn't reliant on tourism or hospitality, didn't have the same number of leisure and hospitality establishments like Bend did. So they didn't, weren't as highly impacted like Bend was. So it's easier for them to recover. But suffice to say that some of the investments in economic development up in Cook County has helped it sustain and be more resilient to economic impacts, certainly related to the downturn from the pandemic. Whether it's, again, from Josh's slide, it's sustainable to, weather a storm that might be ahead in later 2023. Josh talking a lot about some of the housing impacts and so forth. We'll see how that plays out. But suffice to say, Cook County had a very different experience this last downturn. And they were actually, by Heartland Forward, rated the number 9th in the country most dynamic micropolitan. And so, they got some recognition nationally for that job growth, wage growth that occurred through some of their economic development investments. This is a diversity index. It uses the Hatchman index, which really bases economies against the state, right? So the state's the most diverse economy as a whole collectively, but you look at it by county. So if a county was, 1, then it would be equally as diverse as the state, and that's not the case here. But this just uses the Hatchman index, which really shows concentration of employment in industry or industries, and uses a location quotient to quantify sort of diversity. And one of Josh Lerner's partners in crime, Damon Rumberg, who's now at Business Oregon, created this slide for us early 2022. And so this just talks about, what kind of diversity we have, today in Deschutes County. And that's a lot to do with some of the industry and manufacturing growth, some of which, led by Redmond in terms of that manufacturing growth over the last 10 years. And then national recognition, we continue to receive persistent national recognition. We've been top 10 in the country by a number of indexes, both the Milken Institute, Heartland Forward, Wallet Hub, Forbes Magazine, the Chamber of Commerce. And then recently, Wallet Hub did a best and worst small cities to start a business, and they looked at sort of early stage growth companies and what that looked like. And Redmond was actually number 16, Bend number 17 on the list of over 166 metros there. And so, how do we diversify our economy? How does Edco work to do that? Well, we help set the stage for economic development to happen. I mentioned Youth Career Connect. We have 3 internship coordinators. So far, year to date, we have about 52 placements. Last year, we did about 148 region-wide. And so if you or anybody is looking for an intern, please look at youthcareerconnect.org. That is our #1 workforce preparation tool. So this is providing experiential learning opportunities for youth to engage in the workforce. And then we have events to help celebrate some of the things that we do. Many of you attended those. We had our annual Bend Venture Conference back in October. I've got a slide on that. We have an annual luncheon. We do made-in tours in our various communities to help celebrate the work in economic development, and also to help us network and connect the community to the work of economic development to support our industry's growth. We're involved in the Central Oregon Air Service Task Force. That's to draw in additional air service. We're served by these 6 airlines today. Of note, Boutique Air is going to start doing a PDX Portland. Yes, that's Portland flight on Fridays and Mondays generally, starting I think today or tomorrow. And it's loaded for the next 3 months. So it's a smaller airline. It's not a larger group like Alaska, who served that route before. And the reason they're not serving that route is due to pilot shortage, much like many other routes across the country that have lost service or no longer being served, just because the pilot shortage, like labor, is in high demand and low supply. And then our work is also in policy around incentives and resource development, infrastructure, land use, and regulatory environment. We're getting geared up for the legislative session to try and get our #1 incentive program sort of renewed, the Oregon Enterprise Zone program. Carrying on, our work is really serving a broad base of companies here region-wide. Each year, Edco assists over 600 businesses in the region, generally in the traded sector, those companies that are primary employers where their customers are elsewhere, importing wealth through the jobs they create and the investments that they make. And year to date, we've assisted about 387 companies through Q3 2022. And then Business retention expansion outreach, that's where we actually sit down, not just assist, which we might do on the phone. We actually sit down with about 400 businesses a year in the traded sector region-wide. And so far, year to date, we've sat down with about 297 traded sector businesses. And that's where we get our intel from. And that's where we get, our projects from in terms of, hey, we need to grow, we need a space, we need to find land, we need to find a building, we're buying some equipment. How can you help us do that? So really, our industry insight comes direct from those companies, and it can be a barometer to the local economy. I'll mention the Ben Venture Conference that happened in late October, 7 winning companies, about $165,000 in total, $665,000 in total investment occurred at that event. And about 400 people and attendees. Those are funds, fund managers, and then the public that's interested in entrepreneurship here. It's one of the largest angel conferences on the West Coast. We had 4 Oregon companies as part of that $665,000 raise, 2 Central Oregon companies. And then this is a list of the companies. All of them are listed except for the one with the logo and no name. And that is, I just drew a blank. It's a marine company. I just drew a blank. I'm not going to get it. I have it on my screen over here, but it's hidden by the slideshow. Any rate, I'll keep going here. So our industry targets are along 5 broad-based industry sectors. So these are the companies that we're trying to attract to Central Oregon, help start and grow here. Management of companies, administrative support, that's your headquarters operations. Things like IBEX, which is a call center, Les Schwab headquarters, and others, high technology, where you've got data centers, semiconductors, electronics, software and hardware development, lifestyle products, which we include sort of outdoor food, brewing, distilling, and so forth. And then advanced manufacturing, it's a bit of a catch-all, but it's a state phrase that we're using a lot these days. Building products, aviation, aerospace, and metallurgical manufacturing. And then scientific, which Billy picks up bioscience, medical device, nutraceuticals, and so forth. So those are the industry targets. That's what we're tracking today. I'll get onto a slide here from our pending projects. I'll wrap up with about 4 more slides. So total pending projects for Edco Move, Start, Grow today is about 162. The larger balance of those, 42% of those projects are in the grow category, which is a good thing. So those are companies that are already here. And when they tell us they've got a project, and that's where we have really that hand-in-glove partnership with a company to really do something of value to them, help them get a project done, either by expanding their business, adding workforce or equipment. 42% of our pipeline today is grow. And usually we convert about 70% of those to done deals each year. And then 25% is on the start side of things, and then about 33% on the move side of things. Move projects generally convert about 20%. Why? Because outside companies have a lot of factors when they're looking at moving into the region, and sometimes those factors can change. Continuing on, so I mentioned those different industries and so forth. We're still trying to clean up a little bit of data here, but project count by business type. So of the 162 projects, we have a large sector in advanced manufacturing, followed by lifestyle and scientific products. These are the companies that are looking at Central Oregon and looking to expand in Central Oregon. There's some other that don't fit into those 5 industries. And again, we're cleaning up about 4% of that data. So these are the types of companies that are we're working with within this pipeline. And then projects by community right now. So Bend has a fairly substantial number of projects today. Redmond has a good number of projects today. And so there's a good balance happening up in Sisters and Prineville today. And so this is just, where some of the activity is. Now there's some larger projects in the Redmond count, right? And Steve will have some numbers too that he's tracking. We're updating 2 sets of data right now. He may have a little different project count when he shares with you. I just pulled this yesterday. And like I said, we're catching up on some data. And then net jobs by community within that pipeline of 162 businesses. Redmond has a large sum. I mentioned some larger projects in Redmond, but Prineville has a good number of jobs in its pipeline as well, followed by Bend. And then if you look at capital investment by community, again, these are pending projects. So these are companies that have said they're going to expand. And you've already seen some of the activity that Josh has referred to in his slides. You can imagine where some of these investments might come. Yes, that's almost $3 billion in anticipated investment. That investment isn't always the number that hits the ground. That means there's an estimated number sometimes at the beginning of a project. And so sometimes it gets scaled down, sometimes it gets scaled up. But suffice to say, we have seen significant investments occur in Prineville over the years, largely in technology firms. They don't have as high a job counts within the firm, but they have a lot of support jobs that help them grow. But you can see that a large number of our pending project total investments are coming from Prineville. In fact, 4 times that have been in Redmond combined. So again, that won't be the number that necessarily hits the ground. And some of these projects, like I said, are under construction today, that may have even been announced, but haven't actually taken occupancy. So some of those things are going to come out of the pipeline. Now, I will say that we have a bit of a lag year in 2022. The projects coming out of the pending projects pipeline into done deals is a bit down because we've had delays related to materials, right? Josh talked about supply chain. I mean, generators are over a year out lead time these days to get a generator building. Large structural steel is up to 65 weeks on some of these really big 100,000 square foot buildings. And so, those delays are causing a ripple effect in projects becoming done deals these days. In addition to that, labor shortages, both at the permit departments, you guys have heard this too, not enough people there to process permits. You can't get permits, you can't get investment on the ground. And so labor shortages in the companies as well for them to be able to expand and meet new market demands. So labor is causing a lot of the challenges in our economy today across the board. And so I think that, if we have a small downturn in a sector or two, that might help fill the labor force. If our unemployment rate goes up a little bit, that might actually make it a little more employer-driven market, which may not be as bad as one might expect. And with that, I'm done, and I probably went over. So we can take questions at the end.
Okay. Thank you, John. Appreciate all your insight and also appreciate all the work you're doing on behalf of everyone in Central Oregon. So especially on behalf of the real estate community, I know we all benefit from the work you guys do. So Steve, we'll go ahead and turn it over to Steve Curley, and then we'll hold questions for the very end. Steve's the executive director of the Redmond Economic Development, and so hopefully he can give us kind of a micro look at what's going on in Redmond. So Steve?
Absolutely. And, my apologies for coming on late. I had some technical difficulties. I was able to work through those. So here we go. And I assume you can see the slides. Okay. Everything good? Perfect. Okay. And I'm a big baseball fan. I'm a Phillies fan. So I'm just going to pretend I'm Bryce Harper hitting cleanup today since I'm going last. There we go. So I'm going to talk a little bit more focused on Redmond and Ready and the work we do here in the Redmond community. And so I'll give you a little bit more of a microscopic or look into, this community. Just talk a little bit about Ready. We, in our strategic planning, we focus on 3 areas: business development, business environment, and sustainable operations. So really focusing on, helping businesses both outside the region as well as inside the region to, move here, start here, grow here. The business environment, where we're advocating around issues like workforce, childcare, those types of things, that housing that are indirectly, or directly impacting the work we do, but we have, more of an indirect influence on that. And then, of course, our sustainable operations to make sure that, Ready is able to do what we do. So being just like Edco, we're public-private, where we do have public dollars, but we also have investment from the private sector community that help us do the work that we do. So looking at some of the types of things that we do, business intelligence, and really when companies are looking to locate here, they want to know a lot of information about the region, specifically the community and the workforce and those types of things, and what resources are available. And so, we have our ear to the rail, as they say. We're in contact with a lot of the companies here. We kind of know what's going on and are able to relay that information. We help them with site selection, we are not realtors by any stretch of the imagination, but have our finger on the pulse of what might be available, and where we can give them some options and really help find a location that works for them, kind of navigating through the resources. We have a lot of partners that we work with, from East Cascades Works to Business Oregon, a lot of different resources there. Debt and equity financing, getting them pointed in the right direction, whether that's, we always recommend they work with their local bank that they're with, but we have gap funding through Business Oregon and other partners there. We have the tax incentives, the enterprise zone. John referred to that. It's coming up for renewal. We'll be focusing on that in the legislature in the next couple months. But that gives generally 3 and 5 year tax abatement on real and personal property. There are some programs that allow for 15-year tax abatements. And so we are overseeing that and making sure that those are utilized properly to help companies both locate and grow. As I mentioned, workforce development, training and recruitment, have partners like COCC, OSU Cascades, and some of these areas that, on the training side of things, but workforce is an issue, not just locally, but nationally. And so that's always a topic that comes up when we're talking with a company. So just looking at some of the numbers, we work with about 130 companies throughout the year. This is just a snapshot of some of those companies, which I'm sure you will recognize here in the Redmond region. When we look at our past years done deals, you can see that 2021 was a light year. 2022 will be ahead of 2021. I think, as we're starting to come through the pandemic in the last few years, so activity is beginning to increase. I think 2023 will be even stronger, and so things are moving in a positive direction. But they definitely, the last few years, had an impact on getting some of those projects done. Looking at what's in the pipeline, for 2022, about 30 projects, almost 4,000 jobs, and about $577 million in capital investment potential. Sorry, get my things out of the way here. Some of those projects that are coming soon: Build House, which manufactures high-end modular housing; Wild Mike's Pizza, which you may have seen in Winco and Fred Meyer and some of those places. They also distribute to schools, and so I'm going to talk a little bit about their project just as an example here in a minute. Bridge Masters is building their building over on the east side, and they are scheduled to be completed in the spring of 2023. What's really cool about them is they have equipment that is like a basket, so to speak, that lowers people down so they can work on bridges, on utilities and things like that. And they've actually dug a huge hole in the ground, and they're going to put a little bridge over it so they can test and demonstrate their equipment right on site. So that's going to be pretty impressive when they get done there. Performance Pro Supply just opened their doors, offering construction materials. And so those are some of the projects that are in process and just finishing up. There we go. So just to give you an example of a project, Wild Mike's has purchased property over off 9th Street and Antler. And they are a third generation family company, been around since 1967. They're currently located in Clackamas. They distribute across 46 states, both to retailers, as I mentioned, and school districts. They were really more primarily focused on school districts until the pandemic hit, and they pivoted and expanded their distribution through retailers. And so they've continued to grow. The Redmond project will be about a $40 million investment, adding 114 jobs, which exceed the Deschutes County average wage. They're building, which you're just looking at a conceptual drawing here, about 270,000 plus square feet. We're hoping that this project gets started here in the new year, where they'll start moving dirt. And so just keeping a close eye on that one, because that'll be a fantastic project going forward. Just looking at the vacancy rates, they've really, and as realtors that are on the line know, the last quarter, third quarter was about 1.38%. So you can see that we just don't have a lot of available buildings right now. I'm talking to several developers that are looking at doing spec here in Redmond, and I think the numbers show that it is a good time. And so hopefully we'll see some new buildings coming out of the ground in 2023 that'll help address the lack of available space. When you look at our pending projects in the different sectors, we're very diverse, but definitely an emphasis in aviation, aerospace, building products, consumer goods, packaging. But you can see that, I think just over the last 5-10 years, the Central Oregon economy has really diversified, moved away from wood products and strictly housing. And now we've got a lot of different industries growing here, which is good for the region. When you look at our projects, between recruitment, the move companies, and then the grow companies that are expanding, we're about 50-50 in our project pipeline. And so that's a good balance. It's good to have both. And we're seeing local companies that need more space. They need, or they want to, they've been leasing, they want to build their own building. Some have bought property, some are looking, which is, that's a really good sign. But then, we've got those that also want to join our community as well. So when you look at the breakdown by size of company, we're also pretty diversified between the smaller companies that are less than 5, going all the way up to the companies that are greater than 100. So that's a good diversification in company size. Some of the challenges that we are going to, that we're facing is the workforce availability, which has been addressed, the available industrial space, and the uncertainty in the economy. And so these are some of the challenges that we work through. And some of this has been addressed. Josh did a great job, talking about what that's going to look like, and hopefully won't, it'll just be a little dip, and it won't be too much of a speed bump as we move forward. So to kind of sum things up, our region and Redmond specifically continues to draw people and companies. Workforce is going to continue to be a priority. People are drawn to our rural nature and outdoor lifestyle, and the diversification of our economy has made our region stronger. And I can say this, since I'm in Redmond, is no town supports local businesses like Redmond, but Central Oregon does a great job overall as well. And with that, I will wrap up, and Kevin, maybe turn it back to you for questions.
Okay, thank you, Steve. Appreciate it. Let me get my video back on. We do have some questions coming in the queue, so let me pull that up. They're asking how they can get a recording of the webinar. I will be posting a recording of this webinar to our website. It should be up by either this afternoon or first thing tomorrow. Also regarding that, I did have a glitch on my end with Wi-Fi. And so there'll be probably about a 2-minute glitch in the recording that's absent during, I think it was John's presentation. So there'll just be a little glitch there. I apologize for that. So, but yes, we're open to questions. Anyone have any questions for any of these panelists? Some mixed news, but some good information. So let's see, we got some stuff in the chat. How can we get, okay, do you have any slides and stats for the Sun River community? I would defer that to John, I would think. So, and you're muted.
Yeah, if you go ahead and use my email, I'll connect you to Patricia Lucas, who is the Sun River Lapine Economic Development Director, so South County. And she has a newsletter that talks about activities in South County. And so from an economic development perspective, but I know that the data that Josh pulls in the employment department doesn't drill down to Sun River or even Lapine, I don't believe. So It's really just what's happening from an economic development standpoint, much like the data that we have here, activity projects. And I think that that newsletter would be useful. So it's sent out to her distribution list, and I'm happy to connect you to her to get on her distribution list.
Thanks, John. Any other questions? I'm not seeing any hands raised or anything in the chat. I'll just go ahead and in case people are trying to type, let everyone know too. You know, I think we can all say a big thank you to everyone on this panelist. And I give a special call out to John and Steve only because we are an investor with Ready. I would encourage anyone on this class today to look into Edco and Ready to become a member or an investor. We all benefit from the work they do, and the least we could do is probably try to support them a little bit. So just want to put that little plug in there for them. They are both, they're not a municipality, so they are supported in many ways privately. So I would say for the work they do, we need to step up and be a part of it. So still looking.
Kevin, for those that asked, yeah. I did put the Sunriver Lapine Executive Director, SLED Director in the chat, so you can email her directly if you're interested in activity there.
Awesome. Yep, I see it there. Thank you very much. With no other questions in the queue, I will just say once again, thank you guys for taking time out of your schedule to be here today. We'll get you all the real estate agents on the call. Your CE certificates will go out no later than Tuesday. We will include attachments for the slides. And then I believe most everyone had their contact information in those slides as well. So with that, thank you guys and thank everyone. Also, we'll have another class. This will be our last class for the year. Our next class will be in January. We're working out the details, but we're hoping to have Steve Strode, with the real estate agency, the director of the real estate agency, as our guest speaker. It'll be in person, not on Zoom. So I'll keep everyone posted on that. And with that, thank you very much and have a great rest of your day and Merry Christmas, Happy New Year. Thank you.
Thanks. Thanks, Kevin.
Thank you. Bye.